Greetings, members one and all of the Salivation Nation. Gold and especially silver are continuing to take a beating today as the markets have opened up after the long Labor Day weekend. And boy, I tell you what, it is discouraging for some people who really have been wanting the prices to really go up. But fret not. I think the time is just around the corner. Probably as summer ends, we'll see prices start to climb again. But let's take a look here. This is an article from Kitco and Jim Wyckoff. Gold and silver prices down as U.S. dollar index rallies. And if there's any time when gold and silver should be down, it's because of a strong dollar. Strong dollar is good sometimes. But really what we need is a stable dollar. And we don't really have that yet. And I think that because of that reason, the dollar is strong now because of other foreign currencies. I think in time we're going to see probably the dollar weaken. And we just need to be stable in the long run. Gold prices are moderately lower, while silver prices are sharply down and hit a more than 2.5-year low in early U.S. trading Tuesday. A strong U.S. dollar in the foreign exchange market is trumping ongoing world trade tensions. Pun may be intended there, I'm not sure, and wobbly secondary currency markets. December gold futures were last down $6.40 an ounce at $1,200.30. December COMEX silver was last down 0.33 of a dollar, 33 cents at $14.22 an ounce. And as of right now, the recording of this video, we see silver is $14.17. It's getting closer to that $14 break point. And gold is well below $1,200, but is holding steady. But look here, Palladium is the only one that's holding steady. And if it doesn't get above $1,000 by tomorrow, then we're safe in that $1,387 amount for the new Palladium Proof Eagle that'll be coming out. But knowing our luck, it's going to go up over $1,000 while every other metal goes down. Palladium is down. Well, look at the gap between palladium and platinum. It's crazy. Going back here, world stock markets were mixed to lower overnight. U.S. stock indexes are pointing towards mixed to firmer openings when the New York session begins. This article was written before the opening of the markets. Global stock markets were mostly weak on Monday on world trade worries after President Trump during the weekend threatened to exclude Canada from the just concluded U.S.-Mexico trade deal. By the way, the U.S. and Canada did not come to an agreement on a new trade relationship between the two countries. So now it's just Mexico and the U.S. Making a trade, which is kind of unusual. You would think it would be the other way around. The calendar has turned to September, and after the long U.S. holiday weekend, traders and investors are likely coming back to work in a more serious mood after a summer of fun and family vacations. The months of September and October many times find the marketplace focusing on matters of worry. The next couple of months could well find the marketplace closer to examining the secondary currency markets and the beating that they have just taken on the U.S. dollar this year. I also will note that the Brett Kavanaugh Supreme Court hearings began today under much ruckus and fanfare, and who knows what could happen there, but that could possibly affect the markets as well, but we'll see. So far not, because I think most people agree that there are enough votes to give him passage and confirmation to sit on the bench. In overnight news, the Eurozone produced price index in July was up 0.4% from June and up 4% year on year. And they were a little hotter than expected. The key outside markets today find the U.S. dollar index solidly higher as the greenback continues its assault on the world's secondary currencies. Meanwhile, NYMEX crude oil prices are also firmly up and hit a 9-week high overnight, which is quite an interesting. We're seeing that spread between gold and oil, which is kind of crazy. Oil prices are going up and gold prices are going down. Worries about a hurricane in the Gulf of Mexico shutting some U.S. crude oil production for a period of time. U.S. economic data due for release Monday includes the U.S. manufacturing PMI, construction spending, and the IDB TIPP Economic Optimization Index, and U.S. and Manufacturing Report on Business, Global Manufacturing PMI, and Domestic Auto Industries. And here we see 24-hour spot gold. We can see the last 2 days, and then today it's down. Technically, gold bears have the firm overall near-term technical advantage. Gold bulls' next upside near-term price breakout objective is to produce a close in December futures above solid resistance at last week's high of 1220.70. Bears from near-term downside price breakout objective is pushing prices below solid technical support at the August low of 1167.10. First resistance is seen at the overnight high of 1209.70 and then Friday's high of 1214.90. First support is seen at the overnight low of 1197.10 and then 1189.50. Wyckoff's market rating in 2.0. And here we see silver take quite a bit of a dive there. December silver future bears have the solid overall near-term technical advantage and gained more power today. Silver bulls' next upside breakout objective is closing prices above solid technical resistance at last week's high of 1507 an ounce. The next downside price breakout objective for the bears is closing prices down to solid support of $14, which I mentioned earlier. First resistance is seen at 1440, and then today's high of 1459. Next support is seen at overnight low of 1414, and then at $14. You know, I thought $15 would be the low for silver. I'm actually shocked that it's gone down as much as it has. Now we're seeing that it could break below $14, and many of you in the comment section are predicting bearish markets for silver, especially in gold. I still think, man, I'm going to be shocked if it goes down below. I thought we hit the lows before when prices started to climb again. I think it was long enough that we didn't have a dead cat bounce per se, but just that dollar, you know, it's showing some activity and being strengthened, but it's not stable, and that's the key here we got to think about. It's not a stable dollar, and there's also some situations where metal prices could go up with a high dollar index as well, and those are the things we have to kind of take a look out for. You know, the economy is doing well. This Friday, they're expecting, when the job numbers come out, about 100,000 more jobs added. And I think it's going to be an interesting and fascinating thing to see where things lie after this weekend when the job numbers do come out. But keep in mind, the economy is strong by most metrics. But the overall situation in the United States, in my opinion, is still in dire need of fixing. We have deficit spending. We have a projected $21 trillion debt right now. And there's places that are still hurting in the economy or in the government that need to be fixed or move in the other direction to being fixed. And that's something we can't ignore. We've been talking about it for the last 8 years under Obama and 8 years under Bush. Under both those presidencies, we've seen the debt level double, multiple times. Under President George W. Bush, the debt increased in this country more than every other president before him combined. Every other president before him combined under George W. Bush. And under Barack Obama, the debt has increased under every president before him combined. And as bad as Bush was with the debt, never vetoed a single spending bill, Obama doubled it. Crazy. And now under Trump, we've added $1 trillion on top of that. And, it's one of these things where we really can't just settle for slowing of the national debt. We've got to move in the other direction. Eventually, we've got to move in the other direction, or else it's going to come back and bite us. And so keep in mind, it's good to be optimistic, and I am optimistic. But at the same time, I do strongly feel that there will be a dollar reset in some manner or form. will have the luxury of being in the United States and under certain situations to be able to make it a smooth transition, so to speak, whereas other times we've been doing it under a crisis. Bretton Woods, the 1971 and 1973 petrodollar under Henry Kissinger, negotiating that, Henry Kissinger essentially saved the dollar. The newly formed fiat dollar, which probably would have failed before. But that's an aside note. This video is about the prices of gold and silver today. It's an opportunity if you can afford to do so. And as for me, I'm holding out, not because I want to buy. There's other things that have come up that I need to spend money on well, there's one thing, the Palladium Eagle, I don't need to, but as a collector, I'm probably going to get that. May not be the best play as far as for spot prices are concerned, but it is what it is. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.